2017 was a wild time. When you think about how the rest of the cycle is going to play out, it's natural to try to reach back and imagine a 2017 or a 2021 style run as a model for 2025. And sure, a repeat of last time, the 2021 cycle, is possible, but another scenario is that this cycle is progressing in line with the cycle before the 2021 cycle, which was very much a distorted cycle due to the massive money printing, which actually means that 2025 could look more like 2027, or even something altogether different that we haven't even thought about yet, like a gold ETF run. That's a conversation for a different day. If you were into crypto at the time, you'll remember 2017 provided a pretty wild year end. And if you weren't involved back then, well, 2017 was when Bitcoin broke above 10K for the first time and then catapulted up to $20,000 and grabbed a huge amount of media attention along the way. Altcoins, of course, there were a lot fewer back then. Oh, those were the days, weren't they? Didn't have to think about 50 million coins. There were only 20,000 coins. Anyway, altcoins back then absolutely exploded. ICOs were the big craze. Everybody's throwing gargantuan sums of money at all kinds of crap. So let's take a look at how Bitcoin might now be following a trajectory similar, not identical, nothing's ever identical, to 2017. And we can start by comparing the charts. Bitcoin cycles compared, if we look at the charts, can be very, very interesting. So if we look at Bitcoin growth from the last cycle, from the cycle lows across all the cycles so far, the first thing to note here is that there was a vertical growth in the first cycle, in red. But that isn't going to happen ever again unless the US gets civilization-ending inflation and total collapse. So, we probably don't really want that anyway, do we? But the pattern after that, it's much more likely to repeat, as is shown here in blue and green. Blue is the cycle that peaked in 2017, and green is the cycle that peaked in 2021. And as you can see, for this cycle in black, that up until this February, it's been relatively 2017 more so that we're following in terms of how it played out. Since then, there's been more of a divergence. No cycle's ever the same. We have ETFs, we have treasury companies, all that kind of stuff. We have the AI bubble. But if our imperfect closest match is 2017, that gives us a cycle peak on October 20th, and actually a rerun of 2021 will give us a cycle peak on October 14th. So we've got the two most recent data points of reference, both suggesting a top in October. Alternatively, though, we can look at price performance since the halvings. And in that case, we get a repeat of 2017, giving us our next peak on about September 28th, about 562 days after the Bitcoin halving. Well, 2021 gives us a peak around October 20th, 548 days post Bitcoin halving. I'm giving you this information just as some context for you to think about where we likely are in the cycle. And I still think there's a good conversation to be had about even a longer cycle. Top's not until 2026 sometime, but that's for another video. So this view broadens the window a little bit, but we'd still be looking at a cycle top again in autumn sometime. Again, though, the first 270 or so days after the halving, price action was closely tracking the cycle before the last, following the 2017 run rather than the 2021 run. As for price targets, obviously these are always tricky, and we always have to be flexible with our timing and our direction and all that kind of stuff. But a 2017 fractal overlaid onto 2025 gets us a price target of $1.3 million. Okay, that's probably not going to work, is it? Now look, if you think that sounds good, we'll get back to that in a second. Anyway, guys, if you're trading these cryptocurrency markets, you got yourselves an account over in BitUnix. It's the hottest place to be trading crypto these days. They got no KYC, which means you can trade with total freedom. No VPN needed. Trade from anywhere, okay? Anywhere in the world. Doesn't matter where you are. You can trade on BitUnix. Okay, they got all big coins, Bitcoin, Ethereum, Solana, the dog coins, whatever you want to trade. They got you covered, okay? So you can have a good time trading over there. Long the rips, short the dips with deep liquidity. And right now, exclusively using the link right down below me here, there, it's right there. You can go down, check that link out. You'll get up to $400 in deposit bonuses. You deposit $1,000, get $200 back. You deposit $2,000, you get $400 back into your account. That's cash money, man. That's crazy. And you get up to $9,000 in trading bonuses. So the more you trade, the more you can scale it up and then get up to $9,000 back. That's crazy cash back money, okay? Link down below. Go check it out. It's a limited time offer. Okay, $1.3 million. Sounds nice, but it's obviously not very plausible unless the USA turns into Venezuela, which is a whole different problem. However, more realistically, if we check quarterly returns in 2017, Q3 delivered 80%, and 80% gains from here in 2025 will give us a price around $193,000, which we talked a lot about. $200,000 being a reasonable and relatively conservative price target, even $180,000. I'm still in the $250,000 Bitcoin camp, by the way. I think we go up that high potentially. It's all still very bullish though, but if we look at fib levels to get a price target, then the 2.618 level, measuring from the last cycle low, gives a target of about $166,000. So we're getting into a similar kind of ballpark. The 3.618 line's around $200,000. Also, backing up the 2017 similarity, a big question then is whether it would ever be possible for BTC to crack $10,000. People thought about it forever. Now it's never going to happen. And when it did, it hit 20K real fast. In this segment, we've had the same conversation, but with an extra zero. Oh, Bitcoin's never going to hit $100,000. That's ridiculous. Stop smoking your hopium. Well, now here we are. Bitcoin's hit $100,000. It's maintained above that price level for quite a time now, building support for a further move up. The move to 200K come a lot quicker than people think because that's how Bitcoin works sometimes. Then, of course, we have to talk about the Trump effect. There's another major similarity having a big impact here in 2025 is that we've got, well, Trump back. He's back. He's back, man. He was president in 2017 as well. And that means the same approach to the economy, having the same effect on the markets. So just like the first time around, President Trump now appears set on a weaker dollar, which guess what? Spoiler alert, that's exactly what he's getting. Take a look at the US dollar index and it shows very clearly that the dollar has been weak under Trump's presidency. The dollar lost a key support level and is looking like it may be about to take a further dive. Now, as for why that's important, Bitcoin and the Dixie tend to have an inverse correlation. So usually when the dollar drops and it thus becomes less attractive to investors, people seek better returns, right? They go into risk. Bitcoin becomes a beneficiary of this change in sentiment and the price tends to go up. And in fact, if we go back and take a look at 2017, you can see that Bitcoin surged from $1,000 to $20,000 came as the dollar started displaying significant weakness, and the BTC Pico top came almost at the exact cycle low for the Dixie. Magical coincidence, I'm sure. Plus, this didn't just happen in 2017. But now we have the fact that Trump 2.0 and his admin are openly embracing and even promoting crypto. It's crazy. Trump recently suggested that Bitcoin takes a lot of pressure off the dollar. He said all kinds of stuff about it, launched his own shitcoin on Solana, all kinds of stuff, all creating a situation where investors are basically almost being steered away from the dollar and towards buying crypto. Well, and realistically, a whole variety of stocks, right? But look, every cycle is different and it's hard to draw all these exact parallels back to 2017. So one more point when we're thinking about the previous cycles is don't forget the bull run of 2020 through to 2021 took place during and partly because of some pretty extreme macro events. The whole COVID thing was pretty nuts, right? Social conditions were insane. Entire populations of people locked at home because of the virus, getting helicopter money, sitting at their computers all day. And what are they going to do with all that free money they get? Apparently invest in dog coins. That's what people do. If you leave people with nothing but time and money, they go out and buy dog coins, guys. It's a crazy world we live in, but this is the world we live in. Now, 2025 is not like 2021. We'll probably never see that specific combination of factors again. Knock on wood. And that's another reason it makes more sense to think that 2025 will have more of an echo to 2017 rather than being like 2021. That all being said, though, every cycle is different and there are all kinds of unique aspects to bring in to the current bull run, especially the ETF equation. Big money is flooding in from corporations as well, and the ETF thing reminds me of gold. Gold got an ETF in 2004 and it went on an 8-year bull run. Could the same thing happen for Bitcoin? It's not impossible to think that it could. Even if we think that the average stock market bull run lasts for 5 years, we're only 2.5 years into this one. Also, over the last few months, the correlation with 2017 has weakened, so while it's definitely worth checking the 2017 cycle as some kind of reference point, the past does not repeat. Cycles may rhyme, there may be similarities, and it's important to keep those in mind. But every new cycle puts us in uncharted territory with new catalysts, and that's exactly what we're seeing this cycle. And because of that, I think this cycle could go longer and higher than a lot of people expect. The 4-year cycle model is in of itself at threat of being broken here. The ETF correlation with gold could be more of a valuable moment to pay attention to. The treasury company thing throws a whole wild spin on everything going on right now. So there is a very real reality that this cycle is going to continue to surprise everyone because that's what it's been doing the entire cycle, surprising everyone. New highs before the Bitcoin halving, wild volatility in altcoins. Essentially, altcoins in a bear market while Bitcoin rallies higher. There's been a lot of interesting things happening this cycle that have caught a lot of people off guard. There's no predicting the future by looking at the past, but it can give us some interesting insights. But I think the key insight to take away here is that the top is nowhere in sight currently. Whether you want to look at what happened in 2017 and try to overlay that logic onto what's happening now in 2025, or you want to look at just the DXY or the global M2 or any of the on-chain indicators or the gold ETF parallels or any of that kind of stuff, basically everything is saying the stock market parallels of basically a 5-year stock run on average. We're only 2.5 years into this one. We have probably another 2.5 years to go. On average, crypto's following stocks more and more due to treasury companies and ETFs. Everything says we go a hell of a lot higher. Thanks for watching.